Dr. Kim Anderson, our crop marketing specialist, is here now. Kim, there appears to be an above average amount of uncertainty in the market. Can you tell us kind of what's going on and how this might affect producers?
Of course, some of the uncertainty is the financial risk that's going on, but that's mostly in the financial markets. I don't think it's bled over into the crop markets very much. The risk in the crops is you go to Brazil, their record soybean production, record corn production. Brazil may become the #1 exporter of corn this year for the world exports, and China, of course, is speculated to start going to Brazil relative to U.S. You got the drought in Argentina, you got the record crops in Australia, and of course you got the war. Now there is some protection for producers for yield and for price with the crop insurance program. Now sign up ended on March 15 for the summer crops and wheat last fall. You look at that guaranteed price, wheat $8.77, corn $5.91, grain sorghum $5.84, soybeans $13.76, and cotton at 84 cents. Now, yield risk protection is going to depend on the percentage that the producers bought. But like I said, those insurance contracts are closed, but that protection is there for producers.
Let's talk now about what the market may be offering for 2023 harvested crops.
Well, let's use the Pond Creek Medford prices to start with. You go with wheat, somewhere around $7.60. That's 50 cents under that July contract price. If you're going to the Panhandle, it's a nickel or dime higher. If you're looking down in southern Oklahoma, about 30 cents less. And of course, current cash wheat prices are about 20 cents higher. Corn around $5.30. That's 25 under that December corn contract price, and soybeans $12.40. That's 85 under that November contract price. Cotton, 84 cents.
Got to squeeze cotton in there.
Well, 84 cents is the guaranteed price. About 79 cents is the forward contract price now.
Let's briefly talk about Russia and how they impact exports.
Russia's the gorilla in the China closet. You look at 5-year production for Russia, the average is 2.9 billion bushels, 3.4 billion bushels essentially this last year, 290 coming up for 23. Ending stocks in Russia average 364 million, 530 million, because they've stocked it up from that big crop last year and not been able to get it out on exports. If you look at their exports, their average annual exports is about 1.4 billion. They're expected to, even with the war, export 1.6 billion. So what you got to look at, they're coming out with well above average ending stocks. They're looking at an average or better crop this year. Lots of wheat coming out of Russia next year for exports. And if that happens, then I think that's going to indicate our prices down closer to that $6 level.
Okay, Kim, thanks for keeping an eye on it for us. We'll see you next week.